What's up everybody? Welcome to Zappa Invest. Today I have a brand new video for you. It's just a portfolio update so you guys can see what I'm doing. For the moment I have a total of $14,200 in my account. It's 13,000 euros. I'm up 2,700 euros. That is around $3,100, something like that, a little bit more even. And just let's us begin with the stocks that I have in my portfolio at the moment. We can see coming at the latest place is Altria Group. Altria Group is a sin stock. It's a stock that is not for everybody, but I'm personally working in a tobacco sector, so for me it's not a big problem or it's not an issue that it's a sin stock. I have currently 15 shares of Altria. I bought it at 45 dollars for one share, an average price. They are currently sitting at $36. That means I'm down huge, 17%. But again, I'm just letting my dividends drip in. I reinvest the dividends that come in. I'm not bothering to sell this company. I think it's a huge company that will survive over time. So if I'm like 35 years old, I'm just saying something, I will still have it in my portfolio and it will have grown. Let's jump to the next one. And the next one is one of my favorite stocks overall. Why? Because it's a monthly dividend payer. How nice and how easy can it be? It's like the easiest passive income source I ever created, and it's investing in Realty Income. Realty Income is like a big company that has a lot of houses and they just sell it. They rent it to people or businesses, but mostly to residential people. I currently have 16 shares. They are sitting at $54. My average buying price is a little bit higher, it's $63. I want to accumulate a little bit more over time because, like I'm saying, the Realty Income dividends is very nice. Like you can see here, for this month I got $3.73, but I get taxed on that for 0.56. But it's a monthly dividend income. I thinking about that like 4 to 9 more shares. Like if I have 25 shares, it would be very nice. I'm currently down just under 12%, but I have no worries. I mean, this is a no-brainer in the future. It will climb up again, dividends will come in, and I'm very glad with that position. Alright, and the next one is Waste Management. Waste Management is one of those stocks that I'm really hyped about it, but I did not reinvest a lot of it yet. I mean, I did not bought a lot of more or accumulate more of it because I had a few other things in mind with this correction, or how do you call it, black swan, anything. But waste management is also one that I don't see go away over time. I mean, people need to get rid of their garbage. If they have time or no time, money or no money, the garbage needs to go away, and waste management is the guy that comes in and takes it and makes money of it. That's why I invested it. They pay juicy dividends. You can see I have 7 shares of them. They're currently sitting at just $100. My average buying price was a little bit higher, 114. Like you can see, I'm down 10% as well. So on the first 3 stocks, you can see I'm down double digits. But like I'm saying, it is for the long term. I do not invest for like short term periods. I just buy it, let it chill there, let the dividends come in, and it will grow. I'm 100% sure of it. Alright, let's see what the next one is. Oh, we can see Walt Disney. Look, Walt Disney is one of those stocks I just needed to have it. Why? Because I'm a huge Marvel fan. Every time if I watch a movie, I'm like, why do I not invest in this company? Because let's say now I'm 23 years old, let's say I'm 40 years old, I'm still gonna watch a movie when I'm 40 years old. And then imagine if I have children, I will enjoy it so much to watch a movie of Disney, and then imagine if I make money of it. I mean, it's like double points in my opinion. Disney is a company that will not go away in the first 15 years in my opinion, even say 30, 40, because it's manifested in the children's head. It's like my dad said it to me, you should watch this. I will say to my children, you should watch this. It's like an endless loophole, but we will see what they will do in the long term. Of course, now it's a bit of a struggle for them with the situation and the Rona, but it's all okay. Like you can see, I have accumulated 9 shares of it with an average buying price of $120, so a little bit high. I'm down 7% of this, and now you guys are gonna think this guy has a portfolio only that. No, it will come, guys. It will come. I can promise you. All right. The next one is Southern Company. Southern Company is also one of them. You can't go wrong with it. It's a supplier of utilities. I mean, it's one of the biggest one out there in America. They pay a very juicy dividends. I just let the dividends drip in and I reinvest it again. My average buying price is $58. They are sitting at 55 now. I have 10 shares of it. I'm down just over 3%. Like I'm saying, I'm not too worried about it because I have time. I'm very young and it will grow over time. I'm like really sure of it. But of course, I'm not a financial advisor, so please don't invest in stocks because I have them or you just see some guy on YouTube telling about them. Always do your own diligent research because you invest your own hard earned money. All right, and let's see what I have next. Abbvie. Abbvie is one of the smaller positions in my portfolio because I feel like it's a high risk one because in a few years, medicine, their license will end and it will be on the public market. So it will be very exciting to see how the management will adapt on that situation. But again, Abbvie is paying that very juicy dividends. So it's not so nice to see it come in every time. I have here a dividend open. I get like $5.90. Again, the taxes. It is just so passive. I mean, I really like dividends. If you do not know the concept of investing in dividend stocks, I would highly recommend to check it out. All right, so you can see I have 5 shares of it, bought it at $87-ish. It's currently sitting at 84. So I'm down a little bit, but again, nothing huge or nothing that I'm too worried about. All right. The next one, the first stock in the green, is one of my favorites. It's PepsiCo stock. PepsiCo stock is again a no-brainer in the long term. I have friends that work in PepsiCo. I love the products. I consume them myself. And again, I do not see PepsiCo go away in the near future. I mean, I'm talking about 5 to 10 years. Maybe they will not grow that fast or that exponentially over time because they have a product that is already very known. But I do believe that they have still opportunities to grow with time. And the dividends is very consistent. Let's jump a little bit higher and oh, it's like this. All right. In my last video, I told you that I accumulated Microsoft because Microsoft was already on my watch list for over a year, but I never had like the feeling to buy it. I never was like triggered to put the option there and just buy some positions. But then it dropped very hard, but not hard enough. Like the PE ratio is still very high of Microsoft, but it was like now or never in my opinion. I'm very young, so I will not feel it in 5 to 10 years if it dropped even more. But I said I'm just gonna buy, and if it drops, I'm gonna buy more. And I bought like 8 shares of it. My average buying price was $168. So if it drops under the 165, I'm gonna buy again. I mean, it's a very solid company over the years. I have 8 shares of it. They are currently sitting at $184, so I'm up 10% on this position. Here again, it's a small risk in my opinion, especially on these days because the economic is in my opinion not very knowing what they want, especially the stock market. It's went up a huge time. It went up downwards in the last month. So I just have a lot of cash on the side if it goes bad anyways. I'm still investing every month though, but I'm just having a little bit more cash these months because I really do not know what the stock market is doing. It's like living his own life, so I'm just watching it, I'm observing it, and of course I will pull the triggers when needed or when I feel comfortable. Let's take a look to the next stock. The next stock in my portfolio is Alibaba. Alibaba is one of those stocks. It was stable for a long time and I just bought it. I'm up a little bit over there. My average buying price was $184. I'm currently sitting at $201. I only have 3 shares, unfortunately. I'm up 11% on this one. That's a stock that I will accumulate over time because Alibaba, AliExpress, it's the biggest e-commerce thing in the world, in my opinion. It's so, I mean, you can't go wrong with that kind of company in your portfolio. Of course, if it's like 30% of your portfolio, it's too big, of course. But if it's like a small stake, like 4 to 5%, I should not worry about. If you are like in for a little bit of risk and like a little bit grow opportunity, Alibaba is a good pick for you. Let's take a look to the next one, Facebook. Facebook is one of those stocks I bought in the beginning of my investing career. I have currently 6 shares of it. I bought at an average at $170. They currently sitting over the $200 to $212. In my opinion, if Facebook drops under $200, it's a pretty nice deal. No matter what the situation is, Facebook is one of those companies with the biggest and best balance sheets out there. They have so much cash on the side. They know what they are doing. They are really on there with their noses. So I really like it. So like I'm saying, I'm up 31%, so I'm not worried about anything. Again, it's for the long term. If you go a little bit higher, we can see diversified gas. Okay, this one is one I did not found it myself, to be fully honest. I was sitting in a Discord and I saw that there was like a topic about it. I read about it. I saw a few YouTube movies about it. Just looked some more information, and it's actually a pretty nice company in my opinion. Don't ask me why I bought it like I think 2 months ago. My average buying price was like 63.9. It's in pounds in small cash, so this is not in pounds, but it's like pences. So it's like 64 pence is my average buying price. They are now currently sitting at 108, so £1 and 8 pence. I have 550 shares of it. They paid like a juicy dividends of 13+% in my opinion, if I remember correctly. And I'm up huge on this, 77%. I think I bought on the exactly right price. I did not time it or anything. I just opened in the position and let it grow from there. And of course, the juicy dividends is very welcome. So that was a very nice pick of me. Or I'm just very lucky, I don't know. But here you can see the 77%. Alright, the next one is PayPal. PayPal is also one of the first stocks I bought. I have currently 6 shares of PayPal. I bought it on the European market, so it's in euros. My average buying price was 71 euros and 86 cents. They are currently sitting in 133, so you can see even with the downwards trend in the market, I am up huge on this position, around 85%, because I'm a very young guy. I use PayPal very often, and I don't can wrap it through my head that people do not use it as often that I do. To give you an example, if I'm like chilling with my friends and me ordering like Uber Eats or anything, you can pay with PayPal, but like 80%, 85% of my friends do not even know what PayPal is, and it's so convenient. If you are with like a group of friends, you need to scrap all the coins to get the exact money. With PayPal, it's just one button, hub, it's sent. You just arrange it with your friends, the money between you guys. It's so convenient, the app. I'm up 408 euros in total, so I'm very grateful for that. Let's take a look to the next one. It's Apple stock. Again, Apple, a company, you can't go wrong with it in the long term. Even if you buy it at the all-time highs, in 10 years you will even get profits of it, I can assure you. Again, not a financial advisor, it's just my logical sense, my common knowledge sense that I use. Apple, I have 4 shares of it, again, European market, so 143 euros was my average buying price. They are currently sitting at 282, so you can see I almost doubled my position. So I'm up 96% on this one, so very huge gain. I'm very grateful for that. Again, the dividends is also growing, and I see it will grow a lot more in the upcoming years, because the buy-in progress from Apple is like a little bit downward, so I think they will increase the dividends a lot more over time. But of course, we will see. I do not have a glass bowl. And then the next stock is my favorite of all. It's one of the highest risk one in my portfolio. It's one of them that people said just sell it, sell it. When it was like in the 900s, but I never sold it. I just bought it at $262 and I just let it be there. It's again one of the stocks that I will just sleep without any problem and just can say in 10 years you will have profits of this one. So I have 3 shares. My average buying price $262. They are currently sitting at 820. That means I'm up 222% and a half. That is a lot of money, 1,564 euros. So a lot of money of my portfolio, but then again, I invested it, I just let it stand there. So all the profits you see here are not actually profit. It is just value that went from zero to that. And now if I sell all my positions, I do made 2,700 euros, but I'm not in for that. I'm just in for it for the long term. So what I have here at this moment doesn't really bother me. If it's minus 800 or plus 10,000, I really do not care. I rather have my dividends go up every year than my value. I mean, of course, we all want the value go up, but in short-term periods, in short term, I'm talking about 1 to 3 years, I really do not give a single fart about it, but we will see what the future brings, of course. So to give you a small report, I have $14,300. That's equal to 13,000 euros in my portfolio. I'm 23 years old. I have 2,800 euros in profits. These were all my positions. I hope you had a magnificent day, and please hit that subscribe button, leave a like if you liked the video. Thank you very much.